This video is a step-by-step guide for people who want to buy an apartment quickly, profitably, and most importantly, safely. Here I will walk you through each step, tell you all the insights and life hacks, and we will cover all the most painful and difficult points so that you get a complete understanding of how you can come to Batumi and buy truly liquid and profitable real estate. This video is specifically about making money. It's for those who want to profit from real estate, to preserve capital, earn, grow your wealth, and so on. This will be extremely useful for you. If you're interested in simply buying an apartment to live in, I will soon record another video, and that will also be very useful for you. But this video is specifically for people who want to invest. In this video I will show you the locations in the district. We will go over specific complexes together. I'll show you what people have lost money on and what they've profited from. We'll talk about the real pros and cons of various projects and their drawbacks. Of course, we'll also discuss transferring money, the safety of purchases and contracts. In other words, this will be a complete step-by-step video to give you a full understanding of the process. All the data I will use for you will be taken from real numbers, market figures that are currently present in the market. And I'm sure that for someone who wants to buy, this will be an extremely useful video where in one place they'll get a complete full-scale overview from different perspectives. Using the simple task of how to buy a liquid property and make a profit from it, I will show and explain to you how to earn from renting, as well as the pitfalls associated with it. I will also talk about the subtleties and nuances involved in making money, specifically from price growth, how to choose a liquid project that will appreciate well, and why so many people lose money on this task. Additionally, I will discuss the solutions available for those who want to preserve their capital, because there are quite a lot of such people, and this task is also popular. We will also talk about neighborhoods, and all of this will be covered in order. So we'll start with rentals. Why should you listen to me? Well, for starters, I have 12 years of experience and extensive, vast exposure to different locations. This includes St. Petersburg, Moscow, and other Russian cities. And I have worked with many residential complexes. And I have trained many agents in this craft, how to look at the market, where people make money and where people lose it. And that's why in this video I'll give you a summary. The only downside for you is that this video will be a bit long, since many people want to get truly complete information, not just bits and pieces, but the full picture. You'll need to make a compromise and watch the video until the end. I promise you that if you watch this video to the end, you will get a huge amount of value, and all of it will be concise and to the point. There won't be any fluff here, no pointless rambling. Everything will be clear, to the point, and exactly what you need. So watch until the end. Let's get started. In Batumi there are a huge number of residential complexes right on the first line by the sea. And this is actually a cornerstone and an important point. Why? Because most investors who come here think, I'll make money on rentals. I'll buy myself an apartment, and the cheaper the better, on the first line, and everything will be great. Why? The logic is very simple and straightforward. A person who wants to buy property to earn rental income naturally looks for something on the first line, thinking, why not? That is, everyone wants property by the sea. The closer to the sea, the better. But actually, that's not the case at all. There are many segments of buyers who are looking for different things. Some people like a house in the mountains with panoramic views, some prefer the sea, others like a lively, bustling location. And by buying property right on the first line by the sea, you're not necessarily choosing the most solvent clients. And that is also simply a statement of fact. Just as it is a fact that real estate by the sea here in Batumi yields only up to 5% annual return on the invested amount. Why does this happen? Because the people who come here to rent the economy or comfort class property that you bought are looking to pay as little as possible. And naturally, developers provide this opportunity. Developers understand that a person who wants to buy property on the first line wants to spend as little money as possible, so of course they build the corresponding type of housing. Why? Because it's simply easier to sell. The lower the price, the more people are interested, the cheaper the marketing, and all other related expenses are lower as well. But when a tenant comes to you who wants to rent this property, especially during the season, believe me, they encounter a huge number of drawbacks that exist in this housing. And naturally, they don't want to pay a high price for it. They see the quality of the property, they see its class. And the tenants who come to you are exactly those who are only willing to pay a relatively small amount. And that's why prices in Batumi are currently in the range of $35 to $70 during the season, with rare exceptions here and there, but this is the main range. In fact, it's more often around $50. That is about $45 to $50. And occasionally some complexes rent for $65 to $70. But overall, this is let's say quite rare. That's exactly why the yield is up to 5% per year. We can calculate this together right here in the table by looking at the average price per square meter and comparing it with the rental yield calculated for 30 days, taking occupancy into account. And you can see the yield as a number. This is a very important point. You can recalculate this for any other complex and this will save you. Why shouldn't you invest money at 5% annual yield? It's actually very simple. Here you invest for up to 5% annual yield, and you also face difficulties, some problems with reselling, with withdrawing this money. So from this point of view, it's easier to just put your money into some assets like stocks, bonds, or a bank account with a yield, and you can quickly access your money at any time, which isn't always possible with real estate. With real estate, that's only possible if you bought it correctly, entered the market properly, and then you can quickly invest and withdraw your money and get your returns. It's interesting to invest in real estate when you can get at least a 10% annual return. Then it actually starts to make some special sense. But since here everything is being sold and rented out at up to 5% per year, in my opinion, that's just not an interesting story at all. Why does this happen? Why is it that the real estate people consider to be good supposedly doesn't increase in value and only provides a very small income? It's very simple. Almost all of this real estate lacks infrastructure. Infrastructure is a very, very important added value. It's something people are willing to pay extra for. But of course, infrastructure shouldn't just exist. It should offer something surprising, something pleasing. For people, this infrastructure should truly be an added value, not just a puddle of water 2 by 3 meters like some developers put on the roof. This is also a very important point. Then people will be willing to pay extra for this infrastructure. Naturally, brands have understood this. And now when brands build a residential complex here, they don't just do it simply. They create beautiful facades, they design very cool entrance areas, and they build infrastructure that, importantly, people get for free. This is a very, very important point, because if you look at the typical residential complexes here now, there are plenty of them. Let's say first line, second line, there are quite a lot. Enough for everyone, both in the comfort class and in the economy class, where there are just tons. So what is the main feature of a brand? Brands realized this a long time ago, even decades ago. If we rent out not just an apartment, but an apartment with great infrastructure, then instead of charging $50 or $70, we can charge, say, $100, $150 or $200. And I personally had clients who wanted to rent an apartment at the Hilton in March. At that time, the prices were around $250 for, let's say, a large studio, and there simply weren't any rooms available. In other words, you can't even rent a good branded apartment for $250 a night, even in the off-season, just because they're all fully booked. So we went to Le Méridien. At Le Méridien, it was also $300 per night, but there were rooms available there, but they said, we don't want to pay $300. For us, that's already a bit too much. And this is a very good illustrative example. Why? Because if you can rent out your property for at least some decent money, it means everything is fine with your facade, your infrastructure, your approach, your concept, and many other things. But unfortunately, while Hilton rents for $300, most people here in regular comfort class residential complexes, which aren't the cheapest, not economy class, but seemingly more or less decent, are renting out for $20 to $25 per night. Just think about it. Hilton rents for $250, while people are renting for $25. That's a tenfold difference. You might think that this property must be worth 10 times as much. The same difference. Not at all. In fact, it's not 10 times more expensive. For example, the price difference is about 2 times, maybe 2.5. But the difference in rental income is literally tenfold. This is something that a huge number of people who come here specifically to make money from rentals just don't understand. They think that the cheaper they buy, the more and the better they'll earn. But in reality, it's actually the complete opposite. Interestingly, in Batumi, the number of people, tourists, increases by about 20% every year. So the market is constantly growing. The only thing is, if you look at the chart, the only drop was during the pandemic. The borders were simply closed and no one was coming in. All the other years, the market keeps growing and growing gradually. Actually, not even gradually, but growing quite well. But at the same time, this doesn't help residential complexes that are just standard economy or comfort class at all. Their prices aren't going up. Their prices aren't rising. In fact, nothing is really growing for them, precisely because of a weak concept. So those who come and rent these residential complexes, they rent them at the very bottom of the market, and their only goal is to rent as cheaply as possible. And they achieve this goal, they accomplish it thanks to these residential complexes. But the people who buy these residential complexes, on the contrary, they want to rent them out for as much as possible. But they don't understand that this won't work, because this audience, these people who rent from them, are not willing to pay a high price. They don't need it. They're not those people. It's not that kind of audience. This is not the solvent audience that's ready to overpay for some kind of extra added value. This is an audience that pays for minimal comfort and the best possible price for themselves. That's why even if you make some kind of super offer for these people, they will most likely just go to another residential complex and find themselves the lowest possible price. That's why the real story is when you create value for people who are willing to pay extra, willing to pay more. This is the most interesting thing for you as investors, because that's where you actually make those multiples. X5, X7, and this is absolutely real. It's not some kind of fairy tale. You can open up the prices right now and see how those who know how to make money from rentals are earning. And it's really nice, it's cool. I recommend you do exactly the same. And now I want to show you a very clear example. This, as you can see, is the Hilton building. Here it is. It even says Hilton on it. And you can check what prices Hilton has. And this building right next to it, it's the same shape, the same, well, in every way, even the colors are the same, but it's not a Hilton building, it's a separate local management company. And if you pay attention, the price difference is literally several times. Why? Because Hilton has all the branded infrastructure, Hilton has a casino, Hilton has excellent service, Hilton has a huge client base, and they make money, they really do make money. Moreover, the difference you can see now during the season isn't as big as it is in the off-season. In the off-season, it's much, much bigger. Why? Because here, the finishes are good and standardized, but the furniture and appliances are the simplest, not always of high quality. In other words, they're just average, a solid C. Here the service is truly excellent, while here the service is usually hit or miss, depending on your luck. Sometimes it's there, sometimes it's not. Over there, you literally walk in and you are welcomed from all sides, pampered and made to feel great. While here, you just come in, rent some square meters, and that's it. Thank you. And note that this is the absolute top location. So this is the park, and over there is the old town. Basically, this is the best location you can get in Batumi, right here. And even this top location doesn't save this building. In other words, it still doesn't rent out as well as this building does. If you want to earn money, you shouldn't choose based on location. Of course, location is undoubtedly an important factor, but it's not the main factor if you want to earn a lot. You need to create added value. Added value is exactly the infrastructure, the service, the brand, what people trust. That's what creates added value. If you understand this, then you'll always do well with rentals, specifically with earning from rentals. And now you can take a look at this image that I'm going to show you. It does a great job of illustrating occupancy rates. This is also a very important factor, how these residential complexes are filled. That is, even though the price here is several times higher than in this building, its occupancy rate is several times better. This once again proves my point that if you buy cheap real estate, it doesn't mean people will be more likely to rent it from you. In fact, it means quite the opposite. It means that in this kind of property, there is little value for people who are willing to pay a lot, and that means your profit margin is low, and it means you won't be earning as much as you could. And believe me, even in the off-season, the Hilton is always fully booked. Well, depending on the month, of course, in January or February, it might not be completely full. Compared to this building, the difference is just huge, absolutely huge, so please take that into account as well. Now we've smoothly come to the topic of buying and earning from price appreciation. Why is this interesting? Undoubtedly, earning from price appreciation is much more attractive than earning from rental income. Why is that? Because if you compare the numbers, the profit from property value growth brings you incomparably more money than rental income does. So if we're talking about rental income, it's kind of smooth, small, and gradually increasing, but if we look at earnings from price appreciation, it's like this. It's just vertical compared to rental income. Naturally, experienced investors, those who already understand how this works, of course, chase after profits from price growth. But here too, things aren't that simple. Just like rental income, it depends heavily on the value of your offering. So in order for you to buy super cheap and sell super expensive, that is to get the maximum margin, you need to find first an undervalued product, and second, This product should have some really outstanding value characteristics. And that's exactly why almost all developers who are able to build anything at all these days have moved into the premium segment. Why? Because before they could sell for $1,500 to $2,000 per square meter, but now they can sell even at the initial stage for $3,000 when they don't even have a foundation yet. But once it's finished, of course, it's $4,500 to $5,000, no less. Why? Because it's premium. But there's a very, very big but here, of course. Because not all developers can create a truly great product. And what does that mean? It means that just because he's selling to you for 3 doesn't guarantee that you'll be able to sell it later for 5. But naturally, the developers keep quiet about this and just say, well, you know, whatever. Look, we have beautiful renderings, you can buy them. And of course, since we're building premium, it should cost 5. But will it actually cost 5? Well, of course not. The thing is, if yesterday you were making Jigulis and today you decided to make a Mercedes, the chances that you'll actually make a Mercedes today are close to 0. I mean, you don't have the expertise, you don't have decades of experience, you don't have a brand, you don't have anything at all. And basically, developers who are promising you today that they'll build premium properties, when just yesterday they were building comfort class, well, excuse me, but that's pretty much close to, you know what? That's why the story of price increases in the premium segment sounds so tempting, because true premium, high quality, really good, can cost $5,000, $7,000, even $10,000 per square meter. It can easily cost that much if it comes with top-notch infrastructure, if the designs are really impressive, if they're Instagram-worthy designs, and so much more. So yes, that's possible. But can they actually build it? Probably only a handful can. And even then, I wouldn't just recommend it. It's simply a statement of fact. If you want to buy premium and earn a good margin, only look at developers who have proven expertise in building premium class properties. There's no other way. So if you're looking at projects and the developer promises, we're building premium, come to us, $3,000 per square meter with turnkey finishing, everything is great, beautiful renderings, you should go and look at the completed projects by this developer. That is, if his completed projects on the secondary market really do cost $5,000 to $7,000 per square meter, emphasizing not just on paper, but on the secondary market, then naturally you can, with some degree of confidence, assume that this developer from whom you are buying a promise, a concept, a project, will be able to deliver on these promises, at least to some extent, simply because he has already done it before, he already has this expertise, and that is also very important. But unfortunately, in most cases on this market, you will encounter the exact opposite situation. Developers who don't know a damn thing, who could barely handle building comfort class projects before, will now be promising you premium class properties. By the way, this is also a problem and it's a trap. One you can thank me for warning you about if you listen to me, because a lot of people are getting caught up in this right now, since many are fed up with comfort class and realize you can't make money on it, let alone on economy class, which I won't even mention. They already understand that there's a margin here, so why not get in? And once again, they end up getting caught in this story. You can check my words yourself by simply looking at a very clear and obvious trend. You take the residential complexes that were being built here when the market was in 2010 to 2011. This was exactly when comfort class was just starting to be developed. By the way, the developers who started building comfort class back then, at that time there was only economy class here. Those people who bought that comfort class made a pretty good profit, because comfort class as a category simply didn't exist at all. Naturally, if you buy something that doesn't exist on the market yet, something that's just starting to appear, it will inevitably go up in price. Why? Because if there was only economy class on the market and then comfort class comes in, comfort class always enters at the price of economy class. Well, it's a price that's understandable for people, for consumers. And of course, this difference, this delta appears when you can buy comfort class at the price of economy class, and then when this comfort class is finally completed, you gain that difference because you entered the market at the right phase. That's also very important. So as of today, it's pointless to enter comfort class. It has its own price ceiling of $2,000 per square meter, and moreover, developers are already selling this comfort class, sometimes even for more than $2,000 per square meter. But it's also important to remember here that $2,000 per square meter is the maximum price for comfort class. Often it costs $1,500 to $1,700 per square meter. And that's also a normal price for it, depending on the residential complex, the location, the level of that complex, and so on. So when I say 2,000, I'm naming its absolute maximum price. And what I want to say is that if you look at the market, look at those years, look at how many developers promised you they would build comfort class housing and how much of it was actually built in the end, you'll be shocked, I guarantee it. That is, first of all, some projects, including those on the Alley of Heroes, have already been under construction for 8 years. And after 8 years, it's not like they finished everything. Overall project completion is only about 40 or 50%. So one of the blocks is almost ready, and soon people are supposedly going to move in there. But as for the other blocks, who knows when they'll be finished. This is also a really big problem. So not only do many of them offer very compromised comfort, in other words, the comfort level is somewhere between economy and comfort class, because in some places there's not enough ventilation, somewhere else the waterproofing is terrible. There are a ton of flaws, things are crooked, uneven, basically. They cut corners here and there. Instead of a nice finish for the entrance area and hallways, they just used a rough textured plaster finish. Basically, they compromised wherever they could. Why does this happen? Because they started building a long time ago, and over the years labor costs have gone up, there's inflation, all that stuff. So the money they collected back then 8 years ago at the very beginning is obviously not enough to build anything today. So these really extended timelines also create a very, very big problem. They don't allow the developer after such a long time to deliver the project at even the quality they originally planned. And many developers, unfortunately, don't even want to deliver the project at a good quality. In other words, they promised one thing, but from the start their intention was to do something completely different. From the very beginning, the intention was to collect the money, quickly siphon off a portion somewhere, and then finish building whatever they could with what was left. And this is also a big problem in this market. But getting back to our topic, if you want to see, here you go, real examples. Just take a look at the Alley of Heroes. I'm not going to name or, as they say, point fingers at specific projects, because people might say that I'm trying to discredit someone, but that's absolutely not the case. And I have no intention of discrediting anyone. It's just that there's an understanding of what people promised and what they actually delivered. What they delivered wasn't even close to what they promised. I'm not even talking about the infrastructure. In Batumi today, there are practically no residential complexes with free infrastructure. And what does that tell you? For you, as someone who wants to profit from price growth, it tells a very, very important story. That your end buyer, the one who buys from you, won't pay you for this added value. There's simply nothing to pay for. Because with paid infrastructure, I can use it in your building, or I can go to another one and use it there. For me, it doesn't have any added value that I'm willing to pay for. And here there is no free infrastructure. And what's even worse, and in my opinion even more alarming, is that you can't raise the rent for your tenant because you don't have that very free infrastructure. In other words, you can't offer your tenant anything besides square meters. That's also a big problem. There are developers who promise free infrastructure but deliberately just didn't build it. That's why when you're now choosing a project with the expectation of price growth, you need to understand several crucial things. The first is expertise. The second is profitability. And the third is whether this developer is ready to keep their promises. And by ready, I even mean whether they actually want to do it. Because for me right now, developers, those people who actually want to do it, are much more valuable. This very infrastructure that they want to create in the WWF, those who can and want to. There are two very important parameters. First, whether they are actually able to do it, meaning the right budget, the right calculations, all the numbers are correct. That is, the developer initially comes in with the right concept, a well-calculated concept, which is very rare. Almost no one does the math here. They just sell for whatever price they can, and then whatever happens, happens. In other words, the developer calculated everything in advance and collected exactly as much money as needed. Instead of selling to you at $1,000 per square meter and then scrambling to find more money to finish construction. So they gathered everything properly. And most importantly, the second parameter is that they actually want to create a great product for you. If with the first parameter, the capability, things are still more or less manageable, at least hypothetically, they can collect the money, then with the second parameter, the desire to actually do it, it's a different story. In my opinion, from what I see, there are very few who actually want to do this. A genuine desire to create a cool, high-quality product that people will truly enjoy. There are only a handful of such cases, believe me. Another very important thing for you to know is that in the entire economy and comfort class segment, I'm talking about new developments, almost anyone you look at, you can calculate the price the developer is asking and compare it to the price on the secondary market, and you'll see, remember my words, that almost any new development in the economy and comfort class segment is overpriced. What does this mean? It means it's more expensive than similar properties on the secondary market. So think about it. You're buying from the developer now, you'll have to wait 2 to 3 years for construction, and you're taking on risks. And at the same time, you're overpaying. Maybe in some complexes it's $200 per square meter above the market. In others it's $500 per square meter above the market. What does that tell you? It tells you that when you want to sell, you'll definitely be selling at a loss. You'll simply be reselling at a loss. Or you'll have to wait many years until this property catches up with the market at 2 to 3% per year. And in 10 years you might be able to sell it at break even or maybe with a small profit. But what's the problem here? The problem is that in this case you're not taking inflation into account. That is, if inflation outpaces this price growth and you're buying property that's already more expensive than the market, you understand what I'm talking about? You're simply losing money with this property. It's a completely pointless move. And people are lured into this with all sorts of tricks. These include low initial payments, long-term installment plans, pay a little now and then wait, pay less later. In short, there are a lot of different schemes that supposedly justify this high price for you, right? At first it might not even seem expensive to you. By the way, watch the video here. I've covered this issue in detail so that you can understand it. Another big and important feature of this market that you should know is that almost all residential complexes that you buy in the comfort, business and premium segments have virtually no domestic demand, meaning it is minimal. You must definitely take this into account. Why? Because if there are countries, locations or cities where domestic demand is quite high, this can be partially filled, so to speak, by internal stories. Here, when reselling your property, you will still be forced to look for a buyer from outside. What does it mean to look for a buyer from outside? It means that, simply put, marketing and attracting such a buyer will be much more expensive than, say, a buyer who is already in the domestic market. That's just how it works. And when you plan to buy and then resell, you need to understand that if your product, what you bought, has added value, then you'll have no problem reselling it, making your profit margin, and so on. And what does this mean for you? If you bought a product with a weak concept and little value, it will be very, very difficult for you to explain to someone on the secondary market why they should buy your product, which you purchased for $2,000 per square meter from you for $3,000. And in most cases, people simply can't do this, and naturally they end up losing money. But not because the market is bad, but because of the situation. Simply because they choose the wrong products and think that something should increase in value, when in reality it shouldn't. And this is a major problem for beginner investors. They invest their money, they set themselves up for opportunities where, in fact, there is no real potential for price growth. That's why it's so important to correctly determine the value of a product, to properly understand its concept, whether the developer can actually implement it, and so on. This is essentially the main task. If you can do this correctly, then your earnings will definitely be good. Another big trap for many investors is the fairy tales about Emaar. Recently there was a major deal, and apparently, since there's still no final definitive information, but it seems that Emaar is supposed to come in between Gonio and the airport. This is the largest developer in Dubai, who has already built projects in various countries. And in general, his expertise is proven. He knows how to build, and what he builds definitely has added value. It appreciates in price, it's a good story. A good story. But for now it's unclear how much the final product will cost, because there's simply no concept yet, nothing at all. And it's unclear at what price the developer will enter the market, so it's hard to know if there's any margin there, anything to make money on. Maybe he'll enter at a price close to the secondary market, we still don't know. Or maybe Emaar's best investors who are already investing with him in different countries will buy it up at the best prices, so to speak. So basically he'll enter the market, but most of the available volume will be bought up by investors who already know and trust this developer from other countries and so on. That's also an important point. But the main thing is something else. The main point is that right now, many developers, especially those building comfort class housing, especially near the airport, will promise you, look, Emaar is coming in. That means soon Emaar will have prices of $3,500 to $4,000 per square meter. And naturally, of course, you too will be able to sell our junk that we're building for that kind of money. Why? Well, because you see, if Emaar can sell at those prices, then you can too. But of course, that's complete nonsense, and there's absolutely no way anything like that will happen here. So It's clear that Emaar can come in and sell at different prices because people know them, because it's a brand, because they know how to build, and for many other reasons. But if you buy here from just some no-name developer or almost a no-name developer, it will cost within the current market range. The current market range for the comfort class is $1,300 to $2,000 per square meter. This is the main price range for the comfort class. And if we're talking about the new Boulevard, it's usually even more like $1,300 to $1,500 or $1,300 to $1,600. Some complexes are a bit closer to $1,700 to $1,800 per square meter. I'm giving you prices that include full finishing, just so you understand. So forget about any of those fairy tales, even if someone tries to tell you them. That's not going to happen, and that's a completely different class of residential complex. I'm talking about Emaar, and it will cost different money, it's a different segment, everything is different. So definitely keep that in mind as well. This guide to the most popular investment strategies in Batumi will also definitely help you understand the market. There, I've broken down different strategies, their pros and cons. Just by reading it, things will become clearer to you. It will take you 5-10 minutes at most to read this guide, and a lot will become clear to you. Everything will fall into place. The next big trap and problem, of course, is for people who don't want to earn money, who aren't interested in rental income or price appreciation. They just want to preserve their money. And often in their desire to preserve their money, many people choose the absolute cheapest option. Why? Because we think, well, if it's the cheapest, there will always be a buyer, someone will always buy it, and so on. But the truth, again, is that when you buy the cheapest option, first of all, many people don't actually want the cheapest. They want at least some comfort. And many of the people who later buy this cheapest option from you will also be looking for the biggest discounts. They'll be searching for the lowest possible price. So it seems like you bought it cheaply, at a low price, for example, the economy option, but the person who will buy it from you will often want to buy it even cheaper. So why? Because that is the key value. If this is the key value, then of course people will chase after it, and in this situation, you're unlikely to win. Because there will always be someone who's ready to drop the price more, to give a bigger discount, someone who needs to sell urgently, and so on. And so everything I see in this situation is that people either break even or end up with a small loss, or even if they do make money, it's such a tiny amount that it's just sad. So that's why here, it's important to understand who your buyer is. Your buyer is the one who is willing to pay more, and it will cost more. Or your buyer is the one who will never in their life overpay even a single cent. This is also a very important point. Let me briefly explain about the segments. What are market segments? For example, we have the economy segment. Economy can mean with nothing included at all. No fancy entrance area, any kind of facade. That's economy. Any materials and so on. Of course, it varies a bit depending on the developer, but still. If we're talking about the comfort segment, comfort doesn't necessarily have to come with infrastructure. Comfort should at least include, let's say, a nice entrance area, more or less attractive corridors, and for example, at least somewhat decent windows. In this market, comfort doesn't always mean good sound or waterproofing. More often, even in the comfort segment, the waterproofing is the soundproofing is mediocre, and in general, you'll hardly find any real soundproofing anywhere. So often, even in the comfort class, you'll be able to hear the neighboring apartment, or even through another apartment, and that's also a problem. Nevertheless, comfort doesn't have to include infrastructure. If you want to go for business class, then having infrastructure is absolutely essential for business class. And ideally, it should be free, because otherwise, when you rent out the apartment, that infrastructure won't be of any use. So you won't be able to tell your tenant, like, hey man, pay me an extra $100 because you also have to pay separately for the infrastructure. Nobody's going to do that. You'll just be renting it out like everyone else in the comfort segment. So if you want to earn even more, the infrastructure should be included in the package for the tenant. But for business class, having infrastructure is a must. If we're talking about premium class, in premium class, the infrastructure shouldn't just be there. It should be something impressive. In other words, a person should want to take a photo next to this infrastructure. They want to get in there because it's really cool, because everyone wants to get in, not just him, but his friends, acquaintances, and so on. It absolutely has to be prestigious. For something to truly be premium, there have to be a lot of things, a lot of factors. And that's why there are higher standards for premium, for those who know how to build and create designs. Because if they don't know how to do that, then accordingly you simply won't have a premium product. It won't create any wow effect. No matter what kind of images they try to sell you, it won't help you at all. Another very important issue is the market price at which you're buying. Why is this an important issue? Because if you come to the market, it seems like you've chosen the most optimal price. So what does the most optimal price mean? Let me use cars as an example. Maybe that will make it clearer for someone. Renault, for example, has a good price for a Renault. It costs 1 unit and you buy it for a bit less than the price of a Renault. There's a good price for a Mercedes, and most importantly, it's different. That is, a Mercedes might cost 5 times more than a Renault, but even so, for a Mercedes, that price would be considered low. In other words, people will be willing to pay even more for that Mercedes later, after you. So every product has its own relative price. It's the same with real estate. Segment, economy, comfort, business has its own price. That is, you can buy a business class property cheaply, you can buy a comfort class property cheaply, you can buy an economy class property below market value, and so on. This is very important to understand because unfortunately many people don't get this. So they think that real estate is, so to speak, just one price. A square meter is a square meter. No, that's absolutely not the case. Why? Because different people want different concepts, different quality, and pay different amounts for that. So if you understand this, there's one more very important thing you need to realize. That there is, so to speak, today's market price. For example, today the average price per square meter is 2,000, just as an example. And you're buying at 1,900, at 1,800. You think you got a great deal, you think it's awesome. But today, the entire market in the comfort segment, and it's important not to confuse this with the whole market, the entire comfort segment in this particular location, for example, is a bit overpriced. And overall, it usually costs 1,600. But since today you couldn't find anything cheaper than 1,800, you think it's a great price. And this is a trap that people who just want to preserve their money often fall into. They come to the market and pick what seems to be the best of what's available today. But the best of what's available today isn't better than in general, really. So it's very important in this regard to focus on those people. If you're buying real estate not for short-term speculation, but for 5 or 7 years. It's important to understand how much this property has cost over time, meaning what is an optimal fair price for it. Because if you compare prices at the moment, you arrive with the prices that are current at that moment, you might also make a rash purchase. And then when you go to sell, you'll be surprised that the property isn't selling. Because you simply didn't look at the full range of prices, you didn't even know it. You just looked at the current price and picked the best of what was available at that moment. But unfortunately, this is also a common trap that people fall into, and I want to warn you against it. Keep this in mind. Now we're going to go through the different locations. I'll show you aerial views. You'll see the neighborhoods, you'll see specific projects. I'll explain how one location differs from another, how different buyers view each area, what might be valuable for you in one location or another, where there's more of one segment, where there's more of another. In other words, we'll take a detailed look at good projects from above, examine in detail what's available where, and roughly what the annual yield percentages are, and so on. It's going to be truly interesting. So, my dear friends, we've finally made it to the actual authentic neighborhoods. I am now going to show you a very specific residential complex and precisely what it all looks like from a bird's eye view, from high above. You'll learn about all the significant pros and cons, you will check out the current prices and much more fascinating information. So let's get started right away. I will tell and show you absolutely everything in detail. We'll begin with what I'd personally call the farthest geographical location. This particular place is Gonio. Gonio is in fact the location that is closest to the border with Turkey. The border with Turkey is right over there. And this is a fully fledged resort district that only started being developed quite recently. Just 5 years ago, this was still a village with only a few scattered houses. What makes it special? For the most part, it's built up with economy class housing and various long-term construction projects. So for example, this is economy, that's economy. There are a lot of them here. Nevertheless, branded hotels have already started to appear here. What's the advantage of branded hotels? Branded hotels, of course, are definitely a bonus for you because the brand is present in different countries around the world, and that means quality. For example, let's take the largest holding Wyndham. They're building here, Wyndham Radisson, and also Wyndham Grand is being built right here. This is the largest hotel chain in the world with 9,000 hotels worldwide. Naturally, they don't have the drawbacks that many other regular residential complexes here do. What drawbacks am I talking about? Well, for example, the issue of occupancy rates. Regular residential complexes here fill up during the season, but outside of the season they either stand empty or are filled very poorly and at very low prices. The branded hotels don't have this drawback because they have a minimum price threshold. This is usually $90 to $100, below which they don't go. Of course, this depends on the hotel line. Accordingly, they also have mid-range lines, of course. For example, there's the regular Wyndham Residence, and then there's Wyndham Grand, which is the most luxurious line. And the prices there are different as well. It's important to understand this too. What is the advantage? The advantage is that they have unified standards all over the world. So if you buy a Wyndham in another country, you can understand what you'll get in Georgia, for example. That is, you'll get roughly the same thing. And the most important thing a hotel brand does is attract its own clients. That is, a person who comes to rent a Wyndham in different countries around the world knows what quality they will get. And for that, they basically pay about the same amount of money, give or take. It's similar to McDonald's. When you go to McDonald's in any country in the world, you basically know what quality you will get. This is also very, very important, and people are willing to pay extra for that. Another advantage of brands here at this location is that in a non-branded project, none of them provide infrastructure. That is, in some projects it exists, but first of all, it's a compromise, it's not complete, well, in short, it comes with nuances and shortcomings. When a person moves into a branded property, they get everything right away. They get free infrastructure, they get great service, the kind they expect in different countries and so on. That's why branded properties can be rented out well, at least 2 to 3 times more expensive than regular hotels. If you calculate the profitability of regular comfort class hotels here, it's roughly in the range of $30 to $70. At the same time, a branded property rents on average for $100 to $150. That's for the mid-range segment. If we take the top tier ones, like, for example, the Wyndham Grand that's being built, it's already renting out for $250, $300 and up, depending on the season, the pricing they set, their policies, and so on. Of course, this gives you more income potential. Why? Because when you subtract maintenance costs, say $70 from $50, you're left with $20 net. But if you subtract the same expenses from $150, the expenses are the same. So you could be left with $80 or even $100 net and so on. In other words, the profit margin is much higher. And because of that, the returns are higher as well. So if you buy a branded property at a low price, for example, $2,000 per square meter at the start of sales, as was the case here, then of course, at that price, your yield could easily be 15 to 20% per year, which is very profitable. Plus, you need to understand that only branded properties have increased in price here in this market. For example, Wyndham now costs, I don't remember the exact prices, about $3,500 or $4,000, but it started at around $2,000. This Wyndham Grand project also started at about $2,000 per square meter. Now it costs closer to $10,000 per square meter. And why have they become so much more expensive? It's because a branded property, even with a higher price tag, can provide a return of 8 to 10% per year, which regular housing cannot offer. And that's very, very important. Plus, of course, there's the standard of quality and so on. And what people expect, that's exactly what they get, and so on. The problem with all the other developers here is that they sell you a picture, but in the end you get a completely different product. And naturally, when this product has paid infrastructure for your tenants, you also can't raise the prices. There are many, many other drawbacks. Overall, Gonio is a very good area. The beaches here are incredibly clean. Yes, you can see them. These are the cleanest beaches: Gonio, Makinjori, Chakvi, and further on. In the city itself, the water is dirty because of the sewage being discharged. Well, in short, people do swim there, of course, those who don't know, but I don't swim there, and I know that many locals don't either, because we know that the water there, to put it mildly, isn't great. Overall, this is a developing area. What are the current drawbacks? To get to the old town using this road during the season, it'll take you about an hour and a half to 2 hours. That's why this location currently has major problems with transportation accessibility during the season. Out of season, when there are no traffic jams, it will take you about, let's say, probably 30 to 40 minutes to get from Gonio to the old town. So even without traffic jams, it's not exactly fast. Overall, more brands will be coming here. On this site, Emaar is planning to build. As you know, Emaar has invested a huge amount of money in Georgia. About 6 billion, something like that. Well, they plan to invest. They haven't invested yet, but they plan to. And accordingly, they plan to build either residential or business properties here, or maybe premium class, because there isn't a specific project yet, and it's hard to say what exactly will be there in the end, but it will definitely be good, because if you look at Emaar's projects in other countries, well, they're impressive. Let's move on. What else did I want to tell you? There's an interesting little hotel up on the hill, right up there, Litz Resort, and it has stunning panoramic views. It's a regular comfort class hotel, but because it's located on an elevation, it offers an amazing panoramic view. It rents out for $200 to $250 per night, simply because of that huge panoramic view. By the way, this brings up the topic of the first line. Many people rush to buy property on the first line, thinking it's the best. Guys, no, it's not necessarily the best, because first of all, on the first line, there's a lot of economy and comfort segment housing, including in Gonio, and this kind of housing is actually quite inexpensive. There it costs about $50, maybe $40 per night during the season. Sometimes a bit more, sometimes a bit less, but that's not the point. This is not the kind of return that will let you make any real profit. And just take my word for it. Or you can check booking.com and do the math yourself. All the first-line properties yield up to 5% annual return on their value. So if you buy a ready-to-move-in property on the first line right now, your net annual return will be up to 5%. Gross, it might be 7 to 8%, but your net return will be lower. And that's just a statement of fact, so keep this in mind as well. But if you have a unique project with an amazing view, like this little hotel for example, they manage to rent it out at a higher price because there are people who are willing to pay extra for something unique, like a one-of-a-kind view. Yes, they don't have any special infrastructure, there's nothing there that creates a wow effect, but thanks to the absolutely stunning panorama, they can charge more. A bit more than the similar places down below. That's just how it is, significantly. Now we've made it to the new Batumi location, and you can immediately see a truly beautiful, truly expansive park. Here you have a large, numerous skate area, delightful play zones for kids, a big, vibrant skate park, outdoor gyms, refreshing fountains, and so much more. Different plants too, meticulously arranged. If you go for a walk, everything smells absolutely wonderful and really nice. Overall, the park turned out exceptionally great, to be fair. And most importantly, it's wonderfully well maintained, which isn't always quite the case here, remarkably consistently. But there is one but with this location. In this area, you will hardly find any proper comfort class residential complexes. There are very few of them, very few. Now, let's quickly go through and talk about all these residential complexes so you have a clear understanding. So, the first complex you might like is Batumi View. This complex is located right on the zero line. Why is it called the zero line? Because as you can see, there is no road here. Unfortunately, it doesn't have any special infrastructure. There are a few cafes and restaurants there. Some of them are more or less decent, some not so much, but they don't fit into a unified concept. There's no pool, no gym, and a lot of other things are missing. So these are just regular comfort class residential complexes located on the zero line. But for many people, the zero line is a big selling point. Prices here start with finishing from about 1,750 up to 2,500 if we're talking about apartments with a direct view of the park. The price here doesn't go up, it's already fixed, so you won't make any money on price growth. On rent, you'll earn up to 5% per year. Overall, I won't keep repeating this information, just take it as a fact. If you buy something in New Batumi as a comfort class property, you'll earn up to 5% per year. You can recalculate it, this constant doesn't change. For example, if Batumi View is a bit more expensive than El Kvartal, the rental price here is also a bit higher, but overall, if you crunch the numbers, you end up with a net yield of up to 5%. Sometimes it's even 2 to 3%. That's also normal. Well, it's normal for these residential complexes, but not normal in general, because with an annual yield of 2 to 3%, you could just put your money in the bank and earn that easily. Without investing in real estate, without dealing with resale issues or any other complications. So it's simply easier to just put your money in the bank. That's why, in my opinion, there's absolutely no point in investing in real estate for a 5% annual return. It's just making your life more complicated, so to speak. The next complex that might deserve your attention is ALL Building. There are several buildings here. This is Marina Club, here is Sunrise, which is ready. Marina Club is being rented out, there's La Quinta, there's Rainbow, and there's Sunset. It all looks approximately like this. Accordingly, you can take a look. This is what I would call entry-level comfort. But you could say that, in general, it's honest comfort, yes, with its own drawbacks. What are the drawbacks? The drawbacks are that you have poor sound insulation in almost all of their buildings. Some apartments have issues with waterproofing. There's an almost complete lack of integrated infrastructure as a unified concept. Somewhere there's a small pool, somewhere a crooked little gym, and somewhere else just a bit more. But personally, I wouldn't call that infrastructure. There are huge traffic jams inside the neighborhood itself because people have nowhere to park. In my opinion, it would have been an obvious solution to have underground parking in every building. They could have made it paid and rented it out to people by the minute or by the hour, so to speak. A person could drive in, park their car, pay a small fee, and there wouldn't be any traffic jams. But they don't understand this, and there are constant, terrible, terrible traffic jams there. Right inside the neighborhood. If you're a driver in particular, you definitely won't like this at all. Basically here, prices start at around 1,300 and go up to about 1,700 on average. That's the price range, depending on the view and other features. By the way, all the prices I mentioned include finishing, so you don't get confused. Here, all prices are with finishing. This is the second product you can get that's of more or less understandable quality for living, for actually living. Again, as an investment, well, you won't really make much money on it. The next product that might deserve your attention is white sails. It's a bit more interesting than the previous two because it has a large pool in the middle. There's a separate gym here. Here you have both non-branded and branded core-off options. It has its own infrastructure and its own ground floors, and everything above that in this building is just apartments. There's a pool, some cafes, restaurants, a couple of places right here. There's a small shop. This block has gas, these ones don't. Well, there's Grandeur, which is a separate hotel block, and it also has a small part of the infrastructure, like a spa and so on. One thing to note is that all the infrastructure here is paid. So you won't be able to offer your tenant free access to the infrastructure, except for the pool. The pool is included, you can provide it for free, they'll be able to use it, but everything else is paid. And this too doesn't really have a unified concept, but at least here you can say that there's a good gym, a more or less decent pool, and well, an average spa, which is also paid, but at least it's there, and that's already a plus. So yes, this won't increase your rental rate because your tenant won't be able to use these facilities for free, so you can't include it as a service or anything like that. But maybe there are a few little perks, yes. But still, that doesn't save this complex. The yield here is also up to 5% per year. The next complex that in principle might deserve some attention is the Steps complex. Here it is, located here. Many people praise it a lot. But I don't think so. You could say that in terms of finishes, it's honest comfort class. There's only a very small amount of infrastructure there. Naturally, the developer didn't deliver on what was promised. They promised almost a botanical garden, but of course, that wasn't done. If you look at the gym and other infrastructure facilities, honestly, it's nothing to write home about. In my opinion, it doesn't have any wow effect. It's just done for the sake of appearances, but at least it's there, and that's already something. The entrance area is nice, and to be fair, it can be considered comfortable, but of course, all of this doesn't quite reach the business class level. This is what it looks like. This is the entrance area here. In my opinion, it's a very strange decision to have concrete walls in the entrance area. Well, some people like it, but honestly, I never understood it. Fortunately or unfortunately. There's a small cafe and there's a meeting room that was built, but you can't actually use it. For some reason, regular people aren't allowed in the complex. I checked personally. They said, no, it's for staff only. We asked them, why did you even build it then? Well, okay, whatever. Here's a little pool like this. There's a spa area here where you can get massages. There's a sauna and other little pleasures of life. The gym smelled terribly of rubber. I don't know how it is now. At the time when I was there, it was just impossible to stay inside. There's a kind of children's play area, and this is the kind of finishing they have. That's available too, so you can consider it for living. It's an interesting project to live in. In terms of profitability, you won't get any particularly high returns either, also up to 5% per year, but at least you can live there, and it's a more or less pleasant product for living. What else do you want to know about the new Batumi? All this variety of residential complexes is almost entirely either economy class, pure economy, which I do not recommend because the quality is very poor. Hydro insulation, soundproofing, density. There's basically nothing there. And in my opinion, it costs quite a lot, even though it should be cheaper. So it's all either economy or entry-level comfort class. Basically, it's somewhere on the border between comfort and economy. Somewhere there might be a relatively nice entrance area, but everything else is done just so-so. And there's a lot of this kind of housing here. It's being built here. And what you need to understand is that today, please pay attention to this. Any developer currently selling new builds in this location is more expensive than the secondary market. Right here, you can download a table. I made it especially for you. You can see what the prices are for new builds and what the prices are for resale properties. How much more expensive new builds are compared to the secondary market. So basically in this area, there's really no point in buying a new build at all, no matter where it's located. First line, second line, fifth, sixth line, there's absolutely no point because it's more expensive than the secondary market. So if you buy a new build expecting to wait 3 years until it's finished, you automatically end up overpaying, and then when you want to sell, you'll be among those investors who, first of all, can't even resell at break even, or accordingly, you'll have to sell at a loss, as many people do. So there's really no point. Go for the secondary market. I've pointed out good residential complexes where you can buy on the secondary market, at least places where you can live more or less comfortably. So that's the solution I have for you. Of course, you can also consider various other buildings if you're looking for a place to live. Here they are. Well, for example, Orbi Beach, yes, that's a compromise option. There are a ton of drawbacks, a lot of them, but nevertheless, it's something you could consider, right? But again, I wouldn't say you'll really enjoy life there, because when you don't have soundproofing, waterproofing and other comforts, well, it's not that great. And now we're moving on. And what else did I forget to tell you? Here behind the runway, M-Star is going to be built. Well, at least that's what they say. And that's the plan. And what other trap could you fall into? All the developers here who are currently selling new buildings say that Emaar is coming to us. And if you buy from us, you'll be able to sell our complexes for a higher price later. What's the argument? Well, Emaar will be selling there for $354, maybe even more. So that means you'll be able to sell your complexes for more as well. Friends, that's a complete myth. It's a total myth because there are different prices for different segments of residential complexes. And the fact that Emaar can sell for $3,500 or $5,000 per square meter will not in any way increase the value of your regular comfort class apartment. Not at all. So if you hear this kind of myth from developers, just understand right away that they're simply trying to trick you, okay? First of all, the most valuable thing you can do in investing is to look at the product you're buying under construction and compare it to a similar product on the secondary market to see how much it costs. That will answer all your questions. For this location, it will simply clear up all your questions. And if you don't want to bother or spend a lot of time, just download the table or follow the link and check out the table. This will answer all your questions. It lists all the new developments and shows the difference between the price of a new build and the secondary market for similar residential complexes. So basically, there's no point at all. It's easier to buy a resale property if you really want that square footage and then either live in it or rent it out. But in my opinion, renting it out is pointless. There are simply better, more profitable options out there. The next location you can see is Anguissa Street. This is the absolute worst. If you take the worst area in Batumi, this is it. Let me explain why. Because here all the buildings are facing each other, window to window. And while it might look more or less okay in the picture right now, when you're actually standing down there, you'll see these skyscrapers facing each other, window to window, and it's a very depressing sight. Naturally, when they started, these buildings took a very long time to construct, more than 5 years. And when you look at the quality and how it's been done, it's even more shocking than the lack of scenic views, right? But you understand, right, that all the related issues come with this. Traffic jams, because usually there are no parking spaces, there's shade, there's mold. Well, basically, it's the whole package here. So if you want to get something lousy, you're welcome here. You'll get the full experience, everything you possibly can. And overall, all of this is economy class housing. And this is economy class housing, and further on, it's all economy class housing as well. You can see it right here. And it's all economy, absolutely everything, right? Moreover, Anguissa Street continues to be developed chaotically. So wherever a developer managed to snatch a piece of land, they just stuck whatever they could there. So this location is suitable for people who just want to buy something to live in at a super low price, because here you can even find a finished apartment for $1,000 per square meter with finishing, and maybe you'll even find one for $900, right? If someone tries to sell you something in this location for $1,500 per square meter with finishing, just spin your finger at your temple and say, God, goodbye, guys. That's it. I mean, if there are any residential complexes you can get for that kind of money, it's definitely not on Anguissa Street. Honestly, I wouldn't make mistakes like that. Of the more or less decent options, here's what you can get. Well, there's the Next Apartments complex, right? The complex is located right next to the sea, and overall it's pretty decent. You could honestly call it a comfortable class. So it's definitely not economy class, it's genuinely comfort class. And among the advantages here are more or less pleasant entrance lobbies, decent quality, there's gas, and well, here's the entrance lobby, you can see it, there are icon elevators, just standard, very basic corridor finishes. There's a cafe, but there isn't any special infrastructure, and the basic comfort class finishing is also nothing special. The materials aren't top-notch, but they're more or less okay. That's it. And of course, it has good transport accessibility to, say, Grand Mall, a large shopping center, or the Alley of Heroes, which is nearby. In other words, the sea is also close by. So overall, the residential complex is not bad. What are the downsides? It will be built up. All of these old Soviet 5-story buildings will be removed, and here, well, skyscrapers will appear sooner or later. And the sea views that you have now, I think from the 10th floor and above, will be blocked. And there's a similar complex called Next White. Next White is basically the same as Next Apartments, just a bit smaller in size, also without any significant infrastructure. Although, of course, we were promised almost a wow effect. But, of course, that's not the case. But on the plus side, the location is more or less decent, and the developer maintained the quality. So I can't say that it's an outright terrible economy class or that you'll face any major drawbacks there. No, that's not the case. But again, the yield is up to 5% per year if you buy at today's prices. As of today, prices for these properties range from 1,600 to 1,700 up to 2,200 to 2,300. Prices vary depending on the owner's appetite and other factors. And in Next White, it's the same story. Here is the Grand Mall, a large new shopping center that opened a little over a year ago. This building here, this is the first Orbi building. What might be of interest to you? The fact is, when these Orbi buildings appeared on the market, they were essentially the first comfort class properties. So at that time, Orbi was the first comfort class property in terms of price. Now, of course, it's on the verge of economy class, but back then it was a big deal. Because honestly, there was nothing on the market at all. That was about 12 or 13 years ago. So that's when these first Orbi buildings appeared. And what's interesting is that they were sold at the price level of the economy class market. So people were buying apartments here very cheaply because it was a higher segment, but it was being sold at the price of the previous segment. Many people made 2 or 3 times their investment here, and the returns were really quite nice. Why was that? Because it was a new segment and there was increased demand for it. In other words, they were selling better than everything else because at that time there was basically nothing else like them on the comfort class market. And if you want to invest, you also need to choose those residential complexes, those products that are not currently available on the market. Today the market is saturated with economy class properties. They make up 80% of the market. Comfort class accounts for about 18%, but not all of it. Much of it is borderline comfort, almost economy, and as I've already mentioned, prices for these aren't rising, and the rental yield is up to 5% per year. But what is truly interesting on the market today is, of course, branded properties, as well as business class and premium class housing. But there are also certain nuances there. If you look at premium class housing, almost all the projects available, with rare exceptions, are from developers who have never built premium properties before. And naturally, they won't be able to build them now either, but they're already selling them to you at premium prices. So people will end up losing money there too, and losing quite a lot. But we'll talk about that a little later. Now we're moving to Shartova Street. This is the Alley of Heroes, which was recently completely renovated. Here there are already beautiful walking areas. There's a lot of interesting things, fountains and so on and so forth. What do I want to say about this street? There's one very important thing I want to say about this street. Almost all the projects being built here are extremely compromised, and in fact many of them have been under construction for 8 years or more. Why is that happening? Because the developer once started selling them for $600, $700 per square meter, and that was a long time ago. Naturally, that money wasn't enough for him to deliver even the promises he had made. And for example, this project was supposed to be comfort class, but they actually promised business class. I'm sure there won't be any business class here, in my opinion, because first of all, they're only just now launching Block B. It's been under construction for 8 or 9 years, and only now are people starting to move in. There are also a lot of their own issues there, and now they're finishing up Block C. So basically, as I understand it, the main reason is a lack of funding. The second complex is BST, also comfort class, but in my opinion, with overpriced tags. Many are selling or trying to sell for $250,000, $240,000, but of course it's not working out well at all. In general, the price range here is $1,600 to $2,000 per square meter, just your standard comfort class, nothing special. The same problem exists with Blue Sky. The complex was planned as a business class development with an amazing, huge infrastructure, but as of today, only Block B is just starting to open. And even there, people aren't really living fully yet. And again, that's about 8 years of construction. And when Block A will be finished and completed is also unknown. Well, in short, there's Kupoval here. This is the same project as Steps, by the same developer who built Steps. I think it will turn out to be an honest comfort class project because at least they already have one comfort class project, and this one should also be comfortable. If you look at the prices for assignments, you can get them much lower than from the developer, really much lower, and you absolutely won't be overpaying above the market price. Because here, everything that developers sell is also sold at a higher price than the secondary market. You can also take this as a statement of fact. Take a look at the table, you'll see everything there. Among the projects you can also consider here is Alliance Palace. They try to sell for 2,500 to 3,000 per square meter, but in the end it actually sells for around 2,000 to 2,300. People are willing to buy at that price because the finishes are basic. Well, let's call it entry-level comfort plus. Nothing special. There are some issues with waterproofing in certain places, but overall the complex is not bad. One of the features here is that you have a separate entrance for residents, and here is a separate entrance for the Marriott. The Marriott has its own floors, its own rooms, its own infrastructure, which you do not have access to, only for an additional fee. Accordingly, you also won't be able to provide your tenant with free access. As a result, this won't allow you to raise the rental price. It will be in the same price range as all other comfort class residential complexes. As for this architectural marvel, I actually recommend staying away from it. Because if you don't want to miss your flight, like some clients did, they thought they could come down from their, say, 40th floor or whatever it was, I don't remember exactly, in about half an hour. In the end, it took them an hour and 20 minutes to get down because they couldn't catch an elevator during the busy season. And as a result, they missed their flight. And honestly, that's just the smallest issue. I have an employee who had a window unit fall on him in the winter when it was windy. A whole window unit just fell on him, either because it wasn't secured properly or for some other reason. So in short, it's a fantastic building. If you want to experience the full range of emotions that come with owning this property, you can certainly buy it. It'll be fun, but I don't think you'll actually enjoy it that much. As for other projects in this area, there are some you can also consider. Pay attention, I'm telling you about projects that are at the comfort class or higher, because I don't recommend buying economy class here. The quality is so low that, well, you definitely can't talk about making any profit there. That's absolutely out of the question. But even comfortable living isn't really possible there. That's why I avoid them and instead tell you specifically about comfort class projects, where at least you can live more or less normally, cozily and pleasantly. There's also the Centrapolis project, which is positioned as business class. As of today, you can go and take a look yourself and draw your own conclusions about the Alliance Palace project, right? That is, people there have a separate entrance and there are comfort class apartments. Naturally, there's no infrastructure there. Here, they promise infrastructure for residents because there will be a separate block with a Hyatt, and they say that 3 separate towers, the Trident, and 2 other blocks will be specifically for people for living. They will have their own infrastructure. But since the developer hasn't yet provided infrastructure for residents in their projects, there's no precedent so far, I'm not sure they'll manage to do it here. There are some isolated comfort class projects and above, but all of this is really economy class. Let's move on. We're moving on, and next we're heading towards the Old Town. In the Old Town, among the decent projects, there's this Hilton building with infrastructure, and then there's just a standalone building which we could call Comfort Plus class simply because of its location, right? There's no infrastructure there, but it's Comfort Plus. Naturally, the prices here are close to $5,000 per square meter without finishing. And what else can you get here that's decent more or less is, of course, Le Méridien, also close to $5,000 per square meter. And then there's Porta Batumi. Here you can also get something for around $3,500 to $4,000 per square meter on average, sometimes maybe a little less. It's just a good comfort class residential complex, but the